In this lecture, we look at an account that's prepared by the Federal Reserve Bank. So the flow of funds account, or the financial account of the United States, is an account prepared by the Federal Reserve Bank that documents the flow of borrowing and lending in the economy, in the US economy. As we've mentioned before, borrowers and lenders are divided into the four sectors, namely households, businesses, which are non-financial, so non-financial businesses, governments, and the rest of the world, or basically foreigners. These statements show the total lending or sources of funds, borrowing or uses of funds, net lending and net borrowing. Now let's understand how the sources and uses of funds increase or decrease in these sectors. So the total lending, which is the sources of funds, is the net acquisition of assets. Now let's take an example of a household. So if a household invests, say, $100,000 in bonds and $10,000 in deposits at the start of the year, making the total financial assets invested in at $110,000, and if by the end of the year the investment in bonds increases to $110,000 and the time deposits decreases to $5,000, making the investments at the end of the year at $115,000, the household's net lending in that year is $5,000. So that's an increase. So the households have lent or are providers of funds for that year or that period. Now similarly, total borrowing is the net increase of financial liabilities over the year or the period. Now assuming another household starts with mortgages of $100,000 in the year. However, by the end of the year, a new car loan of $10,000 is taken, and let's assume that by the end of the year, $5,000 of the mortgage is retired. So the net borrowing of the household over the year now is $105,000 minus $100,000, which is $5,000. So that's the use of funds by the household. Now net lending and net borrowing is simply the difference between total lending and total borrowing. If the total lending is greater, then the sector is a net lender or is a provider or a source of funds. If the total borrowing is greater, the sector is a net borrower or user of funds. We will look at this sector in much more detail. So we will look at the sources and uses of funds in each sector in much more detail and how this borrowing and lending affects the interest rates and exchange rate markets. So these are very simple but very powerful concepts in understanding how interest rates and exchange rates fluctuate in the markets.